Hello and good morning, listeners. Welcome back to Almus Market Mornings with Shikhar Garg and Jayaram Krishnamurthy. Now, folks, even though there has been minimal movement in our domestic currency against the dollar, rest of the markets have seemed to sprung into action in the final month of this year. A new all-time high for gold against the dollar early this morning, and not just that, but also against INR in the last week. Even our domestic equity index made a new high last week. So, JK, there has been some action here and there. Even in currencies, we have seen dollar index correcting, euro moving, and JPY moving. So, there's been quite a bit of updates. And I would like to know from you what has led to such moves, because we've seen Jerome Powell, the Fed chair, also trying to push the investor expectations of rate cuts a little back, but to no success. So, JK, what do you think? What's going on in the markets?
Hey, good morning. Just to the global markets first. See, apart from Mr. Waller from Fed, who had been more dovish than others, I think there has been no clear dovish message from the Fed, and they have still been pushing, back against the market expectation of early rate cut and the extent of rate cut, in the coming year. But I think this disconnect between market and the Fed is probably going to resolve itself very soon, one way or the other. Powell's comments on Friday no way gave an indication that he is in alignment with Waller, but the market in the current mood is more biased towards taking everything as a dovish, and then that's why the bond yields have remained depressed, broken below key level at 4.30 for 10-year and 4.67 for the 2-year, and the stocks have continued to rally. But there is some sort of an uneasiness about the whole thing, because you are seeing some of the risk of sentiment, which usually is depicted in gold and yen, is in full play. We are not really going to be get carried away by this latest bond rally and the stocks which are just following the trend and probably stretching. Even the stocks are well known to be on overvalued side. So that's the scenario. I think we feel that this bond rally and the stock rally might come to a halt, at least for the time being, because we are heading into a non-farm payroll this week, and then the Fed meeting on 13th of this month, when even you will have a dot plot, and the dot plot and the Fed members consolidated view on the rates could probably swing the markets expectation on rates. Yes, before that we'll also have another inflation number from the US. So those are the things that is guiding the global market. But let me also tell you one more thing, that the market expectation even on European interest rates have been on bullish side. I mean, market has been expecting ECB also to start cutting rates as early as April 2024, and also cut the rates by as much as 1% next year. Yes, there is a case for ECB to cut rates because their inflation has fallen below 3% on the core. And then we have, the Eurozone economy, which is struggling. We have seen GDP number from France and Germany, the two major economies, come on the negative side. So they have a job on their hand to lift the economy, and I won't be surprised. So that's the reason why you are seeing the euro currency, which was strongly pushing towards 1.10, has suddenly dropped below 1.09, and that has had an impact on the dollar index with a heavy weightage from euro. It has also pushed above 103. But yes, the big movers have been gold and yen. On the gold, see the big break about 2070, which was a triple top, happened in Asian time when there is very much less liquidity and the market participation is low. So thin liquid conditions, it has managed to break higher. So possibly it will not sustain as Europe and the US opens. We may probably see some profit takers coming in, but the psychological level becomes now at 2060, 2070, which was holding for a very long time. And any setback for gold, even based on a spike up in yield, will be now held at 2000, which is a psychological mark. So that's where the global markets are really looking at signs for exhaustion in this bond and stock market rally, which has, I think, gone a bit too far in the short term. On the domestic market, we had the surprise of GDP number beating expectations by quite a good notch, 7.6 versus 6.8% expected. Good growth in consumption, good contribution from the government spending. All these helping the growth much higher, and ensuring that 6.5% full year growth will be beaten as well. Now the next push that the market needed was from the political side, and that happened. And yesterday's election results showing that the party at the center gaining more than two states, actually expectation of just one state, probably giving a fight in Rajasthan, and then clearly losing out to Chhattisgarh. This was the expectation, but they are winning all the three states hands down. Is a really a positive sign, in the sense that it looks as though the popular vote is still in favor of the party at the center, and the investors who might have had some jitters about the political uncertainty in the May general election might be heaving a sigh of relief, because we get a feeling that we may have one more term of stable government at the center, and that's a big thing for global investors who look at the long horizon and who want a continuation of policies and reforms. And this might be a medium term support for the rupee, which has remained subdued for a very long time. It did not participate when the dollar was rallying. It did not participate when the dollar has been falling. It has been very steady for several months. Now we may get some push down on the USD INR in the very short term towards 83, or maybe slightly below that. Again, we don't expect a big flow to hit the markets immediately, but yes, as and when we have a spike up, I think it's going to be resisted because of expected flows. We know that the bond market is expecting a large flow in 2024 due to inclusion in the global bond index. That plus the long-term investments is what I'm looking at. FDIs have been subdued for a very long time, and those can actually start now, maybe in the new year. And so I'm seeing 83.40 as a very good resistance for the USD INR, and short-term test of 83 possible. Medium term, I see more gains, but before that, we need to see how the global market pans out. Some people are a bit skeptical about the current situation. They are not convinced that we are going to see a soft landing, and some of the big banks and institutions have built up huge cash piles, not investing anywhere, and that itself is a sort of indication that they're waiting for something to happen. So we will of course wait for this FOMC and then see how the global market pans out before we take a much longer term view on the USD INR based on these political developments. Thank you.
Okay, JK, that was really good. And yes, folks, we have had the election for three of the states in the Indian country. And yes, folks, the kind of results that we've been seeing, or the updates that we've been seeing over the weekend with respect to these elections, have shown that the party at the center is still being favored and picked by a lot many people out here. And these updates are nothing but showing some sort of stability on the political side for the investor community, and that has led to some sort of a belief that there is good possibility of flows to come in. Now these are all sorts of positive. I mean, we've already seen a positive in the form of good GDP data, and it has beaten all the estimates, and it is further expected to beat further estimations for the year. And now the expectations of the flows can then definitely bring about some strength for the INR if the flows trickle in. Very well defined resistance for the Indian currency as JK mentioned, around 83.40. But on the global side, what we are seeing and identifying that the market participants are consistently looking for the signs of exhaustion in the movement that has been there for yields as well as for the equity markets, and it looks a bit stretched. But where the trend goes is the question the market participants are consistently looking out for, and there are certain good amount of data updates that can be expected in the coming 10 days, which will further establish the kind of moves that can be expected over the period of this month. The non-farm payroll, Fed meeting, Eurozone GDP data, and US CPI data. There is a lot many things to watch out for in this next 10-15 days. So that's it for today, folks, and we shall come back again tomorrow with another round of updates. But before closing, I'd like to thank First Basis for an amazing conference on Rupee Money conference, which was quite interesting and had an insightful session along with many more market participants. That was really good, and we shall hope to have such sessions every year. Thank you so much for listening, folks, and we will be coming back tomorrow.